Yes. So that would be entry. So now the way you draw in Lin is a high, low, low, lower, high. So when you have a serious low, lows and lower highs, what we call? Sorry? What do we have? Serious low, low, lower highs, guys. What do you call? Bearish continuation pattern. Well done. So now what you're drawing right there, you need to see the structure to be broken. Your last reference point will be what? Lower high.
Lower high.
Lower high now is broken, and the market created what? Higher high. And now you wait for the confirmation with a break and retest your higher low, and that will be your entry, and then the market reverse to the upside. Do we all get that?
Yes.
Well done. Thank you very much. When we have serious high highs and high lows, we call what? Bullish continuation pattern. Well done. Okay? Serious lower lows and lower highs? Bearish continuation pattern. That's how it works, guys. It sounds, if you do it that way, you know what you're doing. Okay? You know what you're doing. And it's very easy to understand that. If you get how the market changes face or create change of character, then it will be easy for you to take a trade. And that's what I want at the end of the day. As a technical analysis chartist, I need to see that. Okay? I need to see that. John, do we get that? Okay? Who else you want to draw something? Show me uptrend, downtrend, and ranging market. So now you mark for me higher highs, higher lows, low lows, and lower highs. Market start from the low. Yeah. Yeah. And talk, say what you're doing.
Yes, structure, high, high.
Yes.
And high, low.
Yeah.
High, high.
Yeah.
High, low.
Mm-hmm.
High, high.
Mm-hmm.
High, high. Then we enter downtrend market.
Yeah.
Which begins with lower low, lower high.
Yeah.
Lower low, lower high, lower low, lower high.
Okay.
And then lower low.
What about the ranging one?
Ranging market. Ranging market, it creates equal highs.
Yeah.
And equal lows.
Well done. Amazing. Thank you very much. Amazing. That's it. If you understand that way, then you know what you're doing. And that's what you want at the end of the day. You need to understand what you're doing and how the market is reacting in front of you. Then you can take advantage of what the market is doing. Trend lines is very useful and grateful tool to use it when you're trading. The rule of trend line, we need the minimum 2 touch. Okay? We need 1, 2 in order to draw the trend line. The third touch will be the validation. The more touch we have, the more valid it becomes. So if you're drawing a trend line, number 1, we need to go daily time frame. Okay? We need to have minimum 300 bars. 3, we need bare minimum 2 touch. Third touch is validation. Okay? This is validation. So in order for me to draw the trend line now, if the market is creating higher high, higher low, and I draw my trend line at the bottom, the support level, so I have 1, 2, 3. So my trend line is valid. Now my trend line is valid because my support is so strong. Every minute the price touches this trend line, I'm expecting the price go higher and higher. If the price breaks this trend line, okay, means there's a trend change there. There is a trend change. Means the market is changing its face, okay, from uptrend to downtrend. And that's why the reason that I'm using the support of trend line. If I use another trend line on top of the price, means I'm measuring the health of momentum. So I need to see if the market can create and continue higher highs and higher lows in that way. So I will still have a valid trend line because we need 1, 2, 3. We need 3 touch to my trend line to be valid. Okay. The bare minimum I said 2 to start the drawing. Okay. And third touch is validation. So that's what I wanted of the day. And trend line is a great tool to use, guys, and I love it. And even you can use your own strategy only using trend line. Okay. Many people use a trend line just for a daily time frame. Okay. And then put the structure there, and they put the trend line. One is broken, they try to take the trade. Because I said if that happened, then the market changing its face, and we call it trend change. Okay, we call it trend change, and it's very important. When you're drawing a trend line, guys, you have to be very careful and specific where you're putting your lines on, because you cannot draw like this. Many people do the trend lines like here. That's invalid. That's invalid trend line. Okay, you need to have all the touch you want. You need to draw the trend line that way, so you can have the more touch you get, it's more valid it is. Okay, more valid it is, and that's what I wanted of the day. Conjunction. Conjunction zone means, okay, let's say this is the price. Okay, let's say I have support here, and the price comes back here. Reject, come back again, reject, break now. Okay, break now, and come back again, reject. So I have support, 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 resistance. Okay, here I have resistance. If the price coming back again and break and become support that goes up, so now the price is moving, flipping support to resistance, resistance to support. We call it conjunction area. Because there's a traffic, right? There's a traffic there. So once you see that kind of style, action is happening on the chart, means you have conjunction area. Understand now?